Well, hello everybody, I'm LA Little, and this is your daily NeoTA wrap, where we take a look at these markets, and we do it from a neoclassical perspective. Each time we ask ourselves just one question: what happened today, and what does it tell us about the coming ones? I do this show 4 times a week, every Monday through Thursday, broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube under the channel LA Little. So if you want to subscribe anytime content's pushed, you'll be notified. I also do a show on the weekends. I do it on Sunday evening, same time. And that show is a weekly look. We're looking at a little broader perspective, looking at the intermediate term time frame. As far as what happened today, well, today was a down day, but it wasn't that much unless you were in the Dow. The Dow got hammered on bad news out of two of the earnings. One of them was the perennial loser, IBM. IBM comes out with earnings. Earnings just didn't cut the mustard, and they took a pretty good spill. IBM, one of the heaviest weightings in the Dow. The other, because it's price-based, and the other one being UTX, right? So you got the industrials sucking air compared to everything else, down 1%. Outside of the Dow, though, it wasn't too bad. The only real pullback outside of that was really in the Russell. Now the Russell, the bad part about that being the Russell's the laggard. You'd like to see on a day when other indexes are struggling, you'd like to see that one outperform. And if you look at it, NDX still and the composite still outperformed comparative to the Russell, so you're not seeing that rotation back to small caps, which if this market's going to continue higher, that's what it would need, and you're not seeing it. You did see rotation back into some of the laggards elsewhere, but these were the ones that were just totally beat up, and I'm talking about oil and bonds and silver and gold and money coming back into those to some extent, but again, just barely compared to what was happening in the equity markets. What is a problem out here is going to be Apple, and that's tomorrow. Apple comes out after the bell, comes out with the earnings, just hammered down something like 10, 12 bucks, about 12 bucks I believe it was at the end of the day. So you were down 2 today, down 10 after hours. Apple, huge weighting, NDX is, Apple, Google, Microsoft, they represent about 33% of the NDX 100. Google reported last week, jumped 25%. Apple, Microsoft after the bell tonight, together they both fall. Apple about 10 points, I said. Microsoft was down about 2.5%, 3%. So you have a situation where your large cap technology stocks are not going to actually help the market, but instead hurt it. Before we go any farther with that, though, let's look at what the indexes themselves did. Now, if you remember last night, I was telling you you're going to get a pullback today. And that's exactly what started to take place. You had a two-bar reversal. Two-bar reversal, fairly easy to recognize. You go up, you go straight up. The angle of ascent is very steep in a two-bar reversal, and it extends long enough to where it's very stretched. When you get that kind of a case, you go over, back under, close under the prior high. So in this case, if you're looking at the high from the prior day, 2128.91. Last night it goes over, it closes just underneath it. What is it, 70 cents or so? That's a two-bar reversal. That tells you the next bar at best is going to go sideways, but more than likely is going to go down. So today you get the pullback started. Volume really didn't expand or anything, just came down. Had you had good earnings tonight out of Microsoft or out of Apple or both, you could have expected that you would get just a one-day pullback and then another push forward. But that doesn't look like that's what's going to be. If we look at the NASDAQ actually, if you look at it, gave a slightly bullish pattern today. It traded underneath yesterday's low, back over at less volume. That sort of a situation, when you see that, is suggesting that what you're really going to get is you're going to get another push back to the top side. But given the after hours action, this is probably not going to end up doing that. So what we should be concentrating on next is the retest regens, because now we're finally going to get that retrace. And that retrace is going to come back into the swing point high. And if you're actually going to get farther up, in other words, if we're going to get a farther extension to the top side, you need this to hold. And so you've got, the good part about it, you've got a nice extension already. As it comes back, I mean, let's just do the math here. If it comes back, even after today's close, you close at 52.08. Where's the bottom of that high? 51.21. So you got to drop roughly, you know, I don't know, it's 90 points almost. 90 points on a 5,000, that's a fairly good drop percentage-wise. So the probabilities when you look at the NASDAQ on the retest regen are fairly good. They're not too bad. The bad part of it is that you actually had divergence. In other words, the S&P never confirmed the strength that you saw in the NDX and in the NASDAQ. If you look at the NDX is set up almost the same, just a little bit stronger, so it's even pushed up farther. So if you look at the swing point high here on the retrace, it did an inside day today, which tells you nothing. The swing point high's low is 45.23. You close tonight at 46.74. So you got to drop 140 points. That's a very large drop back down to get into that. So, you know, the first pullback has a decent chance of actually holding and getting another push to the top side. That's the good part. Flipping back around to the bad part, we go to the Russell. We go to the small caps, which we were talking about earlier. Now, the small caps came in. They filled the gap. Problem is they actually have more volume than the bar they're coming back into. What they're going to have to do probably is come back into this reversal bar, which has the volume on it. Now, if it holds at that higher level, that would be a great thing. If it gets into it, though, if it gets down into this area and stays down into that area, then you got to start thinking it's going to try to go after the lows. Small caps really not driving the market as they have for the last year and a half. So, you know, right now it's kind of a backseat thing to me. What we may see is a reversal that takes us down hard, takes us down fast, just like we saw before, back here like on June 29th. If that's the case, that's going to be a bad sign. Now, the other reversals that we saw last night that we said would lead to downside today was in Europe. It was in the CACs, it was in the DAX. You got over, you got back under, you had less volume. That says you're going to go sideways to down at best. You had a 2-bar reversal. In other words, exact same setup we just talked about on the S&P. So I said exactly. It's not really exactly. You know, what I'm saying here is that the setup, even though it's a 2-bar reversal, you know, it's kind of a 4-bar reversal, if you will, in this case, because the one with the volume is here, and that volume that you see is actually pushing up. Then you get 2 bars over it. They're both failing, and then you finally get the reversal off of it with less volume here. So similar, not exact, but very similar in this case. If you look at the DAX has done pretty much the same thing. DAX went up, gave you the 2-bar reversal. In this case, it was 3, an intermediate bar in between. Again, comes off, no volume yet. You'll probably get some volume tomorrow. If you're looking at the European indexes, the bar they're going to try to get back into is here. Now, they do have, both of them have bullish retest regens, but unlike the US NDX and the NASDAQ, they didn't get the push up above that, sufficiently, so they're probably going to break it, which is going to do what? It's going to confirm that more than likely we're still in a sideways trend. We've talked about the sideways trends. We've been in the sideways trends all year. It's going to continue. It's not going to stop. That's what I was telling you last night, and that's going to be the case more than likely. If we move over and look at what else is moving or what else may move us, we actually had a little bit of movement in the major sectors, and that's where the real damage is being done. It's not all that evident, but what you are seeing that's very evident is that you're getting no rotation. Here's the SOX, for example. This morning it was trading up. By the end of the day, it's down again. Tomorrow it would be down. It's going to go after the lows. If you look at the IBB, we were telling it was pretty tired last night. It was probably going to start pulling back. It tried today. It really didn't get very far, but that one's going to do the same. And then you have other sectors like the XLB. This one's going to try to break the lows tomorrow. It did get under it today, bounced off of it, but that doesn't look like it's quite done. If it does push away from here, it's a good test, but it doesn't look like it's done. Energy's been heading lower, broke last night, continued today. That's not doing anything for anybody. XLK, remember it came all the way to the top? That one came to the top, tested on the top, and now is going to come off the top. It's going to come off the top probably with volume. And the other one I would look at is the discretionary. Now the discretionary had pushed up, but this 4 days of ugly bars at the top, this also is going to come back, do a retest regen. And like the NASDAQ, like the NDX, you know, they have a ways to go to come back and potentially can hold. The key is going to be, do you see this retrace hold or not? If the strongest indexes cannot hold their retraces, then you're definitely back in the sideways range and you haven't broken out. And so far this year, that's what's happened in every case. So to sum it up, where are we? Well, we're in the same place we've been, and that is that we're sideways range trading. We haven't changed that at all. We still have a bunch of swing point lows down here that potentially can get broken, and I'm looking on the weekly time frame. And if they do, then we're going to have a larger sideways range and we're going to expand to the downside. But that's a ways off. The real question is not here. The real question is over in the NASDAQ, in the NDX. How do these behave on a weekly basis as they come back, and on the daily as they come back in to do their retest regens? If they hold, everything's the same sideways range. If they don't, then you got something to worry about. So that's it for tonight, folks. Thanks for joining me. Tell a friend. Tell two, I'm LA. This is and it was your daily NeoTA wrap. Have a great night, and I'll see you next time. Good night.